Finally, we are joined by Tino Guglielmo, the Managing Director of BAS Oil, with the ticker code BAS, a diversified oil and gas company in Australia and Indonesia. Good afternoon, Tino.
Good afternoon, Jane.
Let me bring up your presentation.
BAS Oil is, for the last couple of years, has been an oil producing company out of Indonesia. And we've just undergone some growth initiatives there. So we are growing the oil production at our Indonesian properties. But some months ago, we took a strategic decision to add another arm to the business, to the portfolio. And some 12 months or so ago, we started negotiating an entry into the Cooper Basin, and we've concluded two successful deals that we are completing shortly, and what they will see us add to this Indonesian business is a high margin Cooper Basin oil production business with the possibility to get into the East Coast gas market in Australia from an early entry from a discovery that has been undeveloped for some years in the Cooper Basin. And I'll just describe that to you. What we've done with the known 2P reserves, we've signed SPAs with Cooper Energy and Beach Energy to acquire the majority and at times 100% interest in this portfolio, which includes two producing oil fields that are producing about 75 barrels of oil a day. And at the 2P reserves level, it's quite a favourable buy-in price. And there's 2P plus 2C, that's contingent resources as well as 2P reserves. The acquisition price is very, very attractive. The point here is that we started negotiating and locked away these deals before the oil price started to run away with us recently. So the timing is fortuitous. As I mentioned, we'll be majority owner and operator of two producing oil fields with growth potential. We'll talk about that in a moment, and an undeveloped gas field. And we have a high equity interest in the rest of the portfolio that we're acquiring. In the near term, and by near term, I'm talking here well before the end of this calendar year, production that is currently around about 75 barrels of oil a day. We'll be doing some very low cost workover projects in existing oil wells that are targeting to get production up to 300 plus barrels of oil a day. In fact, between 300 to 500 barrels of oil a day. And that will generate some significant free cash flow. And I'll go into that more later in the presentation. We also have a portfolio of very, very attractive exploration prospects in the Cooper Basin in some very, very good addresses. And I'll talk about that in a moment as well. We are currently raising capital. We have a non-renounceable rights issue on foot to raise the capital to complete this transaction. And of course, this is a great time to be in energy in Australia, where we have high oil prices. And of course, it's no secret to anyone on this call here in Australia as to the tightness of the gas market. This is just a snapshot here. I won't dwell on this, but you'll see that we're adding from Melbourne headquarters. We're adding the Cooper Basin opportunity, and we've 55% operated interest in South Sumatra in Indonesia. And we've got a very high equity stake in this company from board and management, and our largest shareholder, in fact, is Cooper Energy. The Cooper Basin transaction, if you can focus your attention on the map, you can see that we're acquiring quite a large acreage position in the basin. It makes us one of the more significant acreage holders in the Cooper Basin. The two producing oil fields are the Worrior and the Padalla oil field down at the southwest corner of this map with some exploration potential in, we call it here XPL 93. That's prospective for oil. And up in the right-hand side, the acreage that we have there is prospective for oil and gas. And in XPL 90K, I'll show you some more detail now. There's the undeveloped KIWI gas discovery, which we've recently started a feasibility study for to connect that into the existing grid. In terms of the acquisition, we are acquiring both the Cooper and the Beach interests in these properties for a total sum of 1.3 million Australian dollars that we actually have we've previously raised money for. And we're also assuming future restoration liabilities there. I've mentioned the 2 producing oil fields, and you can see the 2P reserves that we're acquiring at Worrior and Padalla, and the contingent resources are more than double of the 2P reserves. So it gives us some very good near-term opportunities. And we're going to be completing this transaction early in Q3 calendar 22 once the capital raising is concluded. Now, this is probably the most significant slide of the whole presentation. If you focus on the actual cash flow generation potential at the Worrior field, knowing that this is quite low risk, this potential, that we're just illustrating here now with a company that BAS is with a market capitalisation here of just over 8 million Australian dollars. The 12-month cash generating potential at these oil prices for the projects that we're looking at, and I've got high, medium and low cases. The medium case for these projects that we're focused on shows us generating our entire market cash and market capitalisation in free cash within 12 months of concluding these optimisation initiatives. And the optimisation initiatives include recompletion. We've identified some significant attic oil potential in the very last well drilled in the field, Worrior 11, which was drilled at the very crest of the field. That oil has not actually ever been addressed in the wellbore. We will be doing that. And we have a significant fracture stimulation opportunity in the Murta formation, which is a formation that has produced significant quantities of crude oil in the Cooper Basin for a number of years now. We will be addressing that opportunity as well. And because these assets come out of larger operators that have been focused on other properties, we are confident that we can actually increase production from existing wellbores some significant percentage. And it's probably at this point that I'd like to also say that in a previous life, when I was managing director of Stewart Petroleum, myself and my team were responsible for the Worrior discovery and the Padalla discovery and the KIWI discovery, and we in fact had in our portfolio most of these properties that we're acquiring again. So it's very, very good to be coming back to the Cooper Basin, and the board and management team here at BAS has a significant positive history with these properties. So I just thought I'd add that relevant piece of information. This is the undeveloped gas field, the KIWI gas field that was drilled by Stewart Petroleum back in 2003 on 2D seismic. And so you can see in that map that red outline there is the position of the KIWI discovery, and the red outline shows the structural the structural definition of the trap, and the structural trap has between 1.6 to 5 BCF gas in place. When we drilled that well, it was a significant Triassic gas discovery out of the Calamara with a flow test of nearly 10 million cubic feet a day, and it had plenty of capacity to do more than that. But at the time, we didn't progress the development because it was only understood to be relatively small, and gas prices were relatively modest back then. We were talking $3 and $4 a gigajoule back then. Current gas prices, you would have seen through the press, spot markets, 10 times that volume. So not only do we have higher gas prices in the marketplace, being paid in the marketplace by customers, we also have the benefit of 3D seismic that was shot on this in this area subsequently, and you can see two other outlines. One here, you can probably barely read that, but that word in there next to KIWI is it's the KIWI channel play, and then there is a larger light dusty red outline, which is the KIWI pinch out play. So the 3D seismic actually did identify the potential for KIWI to be significantly larger than we understood it to be back then, with a resource size range of between 6 and 50 BCF, which is tremendously economic in any market. So we've started our feasibility study to determine the cost for connection to existing gas infrastructure, and the strategy to identify the actual size of the resource, and that will likely mean that we will complete the KIWI well for production and put it on extended production test, and from that extended production test, those results are the same. That'll give us a very, very strong clue as to how big the structure can be, and if we're right and suggest that, and the results from the producing well or producing KIWI gives us confidence that it is bigger, then we'll attack it with a drill bit as well. So it's quite a significant opportunity. We will be acquiring 100% of this opportunity, so we have the option to farm it down or to carry it forward ourselves. And we have been approached by gas customers interested in actually writing gas contracts for this resource as soon as we choose to do so. The other thing that we've got here is adjacent to this area in PL 182 particularly. PL 182, we will own 100% of that. PL 182 is in the heart of a geological feature called the Patchawarra Trough. The Patchawarra Trough contains very thick, deep Permian coals that are known to be the source of the majority of the hydrocarbons discovered in the Cooper Basin over its life now, which is approaching 60 years actually. And we are adjacent to a very big push that the Cooper Basin joint venture is doing, led by Santos. Santos has recently drilled a horizontal well called Bean Bush number 2, and that was targeting the deep Permian coals. That horizontal well has been in place, has been placed by Santos, and they will shortly be fracture stimulating those coals. That is probably the biggest technical advance that the Cooper Basin has seen. A success there will actually be the biggest thing that has happened to the Cooper Basin in probably a decade, and Santos is quietly actually working on this breakthrough, and we will own 100% of a property adjacent to Beanbush with those same coals, significant areas of those same coals. So success by Santos will immediately rub off on us and unlock vast quantities of gas. I'm talking trillions of cubic feet of gas potential that will be unlocked by success at Santos. So we have great optionality there with PL 182 and the Kiwi gas discovery, as well as other exploration prospects for oil and gas in that area. I won't spend a lot of time here. We operate two producing oil fields in Indonesia. I'll just move your attention to the positive results we've achieved from the recent drilling program, where we drilled the Tangai 5 development well, and you can already see a 95% increase in production between April and May, which is the when we brought the new development well online, and that well will be taking production up from what was 300 barrels a day to 1,000 barrels a day. In fact, we are already doing 1,000 barrels a day in June from that total field. So we are our growth initiatives here that included growth in oil production in Indonesia, all our growth initiatives are kicking in. Okay, just to summarise the entitlement offer that we've got at the moment on foot, we're seeking to raise $4 million. The offer is open at the moment, and about half of those funds are dedicated to growth initiatives in the ground, and we also the other half of the funds are satisfaction of a bond that we need to put in place for the Department of Energy and Minerals here in South Australia that covers the restoration liability, and so that offer is a 1 for 2 non-renounceable offer at 4.5 cents, where we are linking 1 for 1 free attaching option. That option is listed as well, and so they're the terms of the offer, and that's currently open. This is what we will look like after the completion of the transaction. So we have production in Indonesia, 55% operated interest. We will be operating all the properties in Australia. We'll have 100% of the 2 production licenses there, you can see on the left-hand side, and between 70 and 100% of the remaining properties, and all are prospective for either oil or gas or both. So we're pretty excited about the portfolio we've put together. And with that, reflecting back to that cash flow generation chart that I showed you earlier in this presentation, our objective is to take advantage of what we believe is a watershed moment, and that we will be very close to self-funding, if not totally self-funding, by the end of this year, with the only caveat being if there is a deal that is too good to look past, we will look to do that. But in terms of the work program going forward, with the cash generation potential we see in this property, we hope that this will be the last capital raising that we'll see for some time to come. If you look at the rogues gallery here, and you focus into, not myself, of course, but gentlemen like Hector Gordon, Mark Lind, and Peter Mullins were instrumental in the growth that we've seen up until not too many years ago in Beach Energy, and through their Cooper Basin sojourn. So we've got a very, very deep knowledge in the Cooper Basin, where we're adding our property. And our general manager in Indonesia is a PhD in petroleum engineering in CO2 enhanced oil recovery, the team in Indonesia has got some really good technical capability. So as well as having production in Indonesia, I will be looking to get some of the Indonesian human resources involved in the Australian operation as well. So it's a pretty exciting time here at BAS, and we're pleased to commend it to you. Thank you, Jane.
Thank you, Tino, for the great presentation. You did actually mention this through your presentation, but maybe just for clarification, you were planning a feasibility study at KIWI, but
yes.
you mentioned that you might actually, is that currently underway, and when can shareholders?
Thanks, Jane. That's a great question. Elements of it are already underway, and I'm starting to see the results of that through. So we are very, very excited with the economic potential that we're seeing at KIWI. We'll start the first of those results. We should be available to investors, within 30 to 60 days maximum.
Well, that actually brings me to my next question. So in addition to those results and the closure of the capital raise and the acquisition, probably the Cooper Basin projects, what other news flow can shareholders look forward to?
Within, again, 30, 60-day time frame, we've already started planning the well work that will result in that significant increase in production. So we think that there are some minor tweaks to the facility that we'll be able to do literally within the first couple of weeks of ownership that will increase production by some reasonably good percentage. But the objective is to get to 300 to 500 barrels of oil production a day. Those projects, we'll have executed them. Look, it'll probably be, we're planning them now. We'll start them in about 60 days time. But I'm planning, if you want to use the political analogy, we're building a 100-day plan, and it's a pretty significant amount of work that we're looking to execute within the first 100 days of ownership. So there's a lot of action on the ground and with the studies that we're doing. So it's a very, very exciting 100 days.